Hello everybody, so this video is entitled Q2 Updates, and these are my evaluation updates for 5 stocks, including a new one, AppLovin. I added AppLovin to the spreadsheet. So let's go ahead and get started. Let's start with Kaspi. Kaspi, I started covering this stock about, 8 months ago, something like that. It was trading in the 70s. The stock has been on somewhat of a run, I suppose, and that's because the stock is doing well. First of all, the sector is art, right? E-commerce super apps. If you look at the performance of C Limited, for example, you'll see that the sector is in high demand. Kaspi is kind of the undiscovered player in that sector, and it's in a region of the world that is, I guess, lesser known to the US investor, and that region is Kazakhstan and Turkey. And I want to point out, of course, that this stock had dropped. It went through a valley of despair because they acquired a company called Hepsiburada, which was a Turkish e-commerce. But if you look at the call, if you look at their performance, they've done really well with that acquisition and actually growing the share. And now you have 47% of this business is Turkey, and of course 53% is Kazakhstan. A few years ago, of course, I wasn't covering it, but a few years ago, this business was mostly, if not only Kazakhstan. It was only Kazakhstan until they acquired Hepsiburada. Kaspi is very interesting because it's a structurally highly profitable business because they used to be a bank, and in the way they are structured, it creates a lot of cash flows. Their EBITDA margin is actually 56%, and this is not a typo. It's a business predicted to grow at 33% next 12 months. You can see their growth is pretty even. I mean, if you look at the past 12-month growth, we had 28% in GMV, 33% in number of transactions. The growth is pretty even across the board, across both countries. And you know, I have no reason to doubt the analyst number here at 33%. Gross margin is 70%. And this is a business that is dirt cheap. EV over GP over RG is 0.08. So slightly cheaper than HIMS for a much better rule of 40 because of their legacy as a bank. And this business has the advantage of not moving too much. It's not subjects to the whims of retail investor. It's largely undiscovered. And so I like Kaspi quite a bit. I think the stock is still very, very cheap. It went up 30% the past 6 months, maybe a little ahead of itself, but barely ahead of itself. It's roughly growing at the pace of its revenue growth, and I like to see that. Let's talk about 2 other stocks. So I'm going to talk about Zeta in comparison to AppLovin. Of course, entirely different businesses. One, displays ads on a lot of games, a lot of apps, makes a bunch of money from ads. Another one is a holistic marketing platform for large corporations that allows the following of something like more than 0.5 billion people or something like that they can track. So slightly different business, but nonetheless, both hot businesses. Zeta, I would argue, is the hot business of right now. A lot of people are talking about Zeta right now. Zeta perhaps getting ahead of itself the past 2 weeks, right? Zeta went up quite a bit the past 2 weeks. These things tend to mean revert. And AppLovin, perhaps a little bit too much negativity. And the fact that the stock is at a 1-year low, and actually if you zoom out, it's closer to like a 2.5-year low. That gave me pause, and that was enough for me to add it to the spreadsheet. Now, unfortunately, as much as I like a discount, and we get a discount on AppLovin, on my spreadsheet, it's trading at a 0.57. Rule of 40 is 109. That's very good. It's much more profitable than, say, a Zeta. But you're paying up for that profitability in the form of EV to revenue or EV to gross profit or EV to adjusted EBITDA is fine, like I said. But this is a stock that's trading on EV to adjusted EBITDA. It's a stock that's trading on PE. It's not a stock that's trading on growth. And so as a result of that, I think it's a little expensive. At least my spreadsheet, which is a hyper-growth-oriented spreadsheet, which is going to put a premium on revenue growth in this spreadsheet, my spreadsheet is not looking too kindly at 0.57. It's a little tad expensive still. It's crazy to think that a stock that was, trading way past 700 not too long ago is at 300 now, and it's still expensive looking. So unfortunately, when I look at 2 of these stocks, I wouldn't be too interested right now. I think AppLovin is still a little expensive, and I think Zeta it has gotten ahead of itself a little bit. I think that we're going to see some mean reversion on Zeta. Getting used to being caught on the wrong side of a few of these trades. Now I'm not. I'm being careful with this thing. Being very careful with my addition to stocks lately. As you may know, I haven't added a lot of stocks lately because I think the market has become more like a casino than anything the past few months, and so I'm being very careful. Speaking of the casino. So again, add more time to look at HIMS, add more time to look at, other people's stakes. Even some analysts upgraded their guidance. One of them upgraded guidance by like $10 or something like that. Yet the market totally forgot about HIMS. Yeah, HIMS is down 3%. We're down 3% from earnings day. It makes absolutely no sense to me. I cannot explain how we're still sitting under $30. This is a stock that is firing on all cylinders. They reported exactly what Wall Street wanted. I mean, what more could we possibly want? Like the guidance was increased. The international business is doing well. Organic growth is still there at 70%, but it's not only still there, it's gonna pick up because we're getting testosterone, we are getting GLP-1s ramping, we're getting peptides, so there's gonna be a new wave of revenue growth, and of course we're getting international growth, which has 70 next. Okay, they acquired it, but when you acquire a firm that's this small, you can integrate it. And the guidance, of course, their guidance is 32 to 41%. So let's call it 37%, like I did in my spreadsheet. This is a business that's going to grow at 37%, when last year people were saying the growth would stop at HIMS. The growth is not stopping at HIMS, and yet the stock is trading under $30. This stock price movement is a complete mystery to me. And I will keep emphasizing that there's rarely been a time when I haven't been comfortable with HIMS's stock price, because it's always looked cheap on EV over GP over RG. This is a stock whose my growth-oriented valuation has pretty much dragged the growth of the revenue all the time. All the time it's lagged the revenue growth, and we haven't had multiple expansion on HIMS. So HIMS at 30 today is as cheap in my view as it was when it was trading at $6 when I started covering it, and it only had ED and air loss. Right, a little more than that, but barely more than that. So it makes no sense to me. The market still does not give this company any credit, it forgot about it. Moved on to AI, moved on to better things. What can I say? And then last Q2 update is eToro. eToro is really the stock I want to talk about. eToro is not very well known in the United States. It's actually something like 5 or 10% of their business or something like that. But eToro dropped because they announced acquiring a trader-oriented broker in the US, and they're going to integrate eToro. eToro, I find a very fascinating company. I would suggest listening to the CEO of eToro. He's done a few interviews. These interviews are, in my view, absolutely stellar. I like the CEO. What I like more though about eToro right now, when I look at the stock, is I do not understand why eToro has such a disconnect. Because if you look at there's really 3 big public players. You have Robinhood, you have Webull, and then you have eToro. If you look at Robinhood or Webull, they traded roughly in line, right? In line with volatility. We have extreme volatility. These brokers make a lot of money right now. And this is part of my thesis to seek exposure to those, is because, I try to figure out, how do you make money on the volatility? How do you make money on all of the gamblers coming into the market, on the market turning into a casino? Well, you make money on fees. And how do you make money on fees? Well, Hyperliquid is one way to play it, because Hyperliquid buys back 99% of its fees. But Hyperliquid is also a crypto, and a lot of people don't want to enter crypto right now because it's in a valley of despair of its own and it's boring. So what's another way to play the volatility, in my view? Well, it's these brokers, it's these stocks who just make money on fees, and there's more trading, there's more fees. And eToro, on the call they talk about it. They have this ability to go from hype to hype. They can go from commodities, you may remember silver trading at the beginning of the year. Before that, they were crypto. Now they're into AI stocks, and it's clear that the volatility right now is in the stock sector. Well, guess what? A platform like eToro has it all. If you go see a Coinbase, it doesn't have it all, right? Robinhood and Webull also have it all. And so right now it's stocks like SpaceX who's had a crazy run. This is where the volatility is. These stocks, in my view, will continue making money as we keep getting these wild swings in the market. And And eToro, I don't understand why eToro dropped so much. It dropped so much compared to a Robinhood or compared to Webull. I cannot explain, but the stock is down 15-16% since earnings. Yeah, I have a hard time explaining it for a call which to me looked really, really good, and an acquisition which prepares them for the future and, you know, capturing their fair share of the US market. And if you follow eToro, actually, I've listened to a few conference calls, you'll see they have a makeup that is very, very different from, say, a Robinhood. eToro is like all about traders. It's all about traders, it's all about apps, it's all about pro users going much more on the curve than, say, a Robinhood, right? It's like eToro maybe closer to like a Tasty Trade or something, but Tasty Trade is just options. It's really its own thing. They have their own unique culture. I'm not as sure if you were to compare Webull and Robinhood, I'm not as sure they are that different. eToro is really, really its own thing, and it's very big in Europe. So it makes no sense to me why it dropped. I don't really know. One of the reasons could be it's a new issue. There's not a lot of analysts, not a lot of people covering it. The forward revenue growth is a little disappointing at 11%, but I think this is exceedingly low. In my view, as soon as volatility comes back, especially with the fall coming up and the midterms, in my view, this will change very much so. I mean, you have a company who's trading at a 1.5 times forward revenue, so it makes, and you know, it'd be what, like a 1.4 past revenue on this, because the revenue growth on my spreadsheet, I didn't even put it in there. So I don't understand the disconnect. I see a valuation disconnect in a lot of these finance stocks. When you do comparative analysis to other, you'll find a few that are disconnected. So I don't understand why eToro is disconnected. I may be entirely wrong on this. The market may know something I don't know. So these are my updates. Oh, one last thing I wanted to say. This is not a NBIS video, but to me, NBIS up 30% yesterday. It's very obvious. NBIS is running ahead. It's running ahead. It's gone up again, but this time too fast, too high, too fast. And my view is NBIS will probably mean revert a little bit. I just don't like these markets when the stocks either move too high or too low in too short of amount of time, and you don't have time to build positions. It's been a very annoying market. That's why winners who win regardless of the trade, where the trades go, these winners win based on the volatility, and I like that. I like that very much. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.